Hello, Cryptonauts, and welcome back to another episode of Cryptocurrency Chat. I am your host, Blockchain John, with my co host, Jake Jabrelli, here to give you the top 10 daily stats as well as your crypto news of the day. With that said, we already have CoinGecko's up and ready. Jake, if you don't mind, start us off with the top 10 daily stats.
Alrighty. At the top, Bitcoin surging ahead 15% in the last 7 days. It's taken to an all-time low. I think we all know why. Number one place is because of those future ETFs. Anyways, Bitcoin's at $65,824.97 as of right now. It was much higher than that a couple hours ago, but we're not disappointed.
All right.
As I said, 15% up in the last 7 days, a market cap of $1.24 trillion. Woohoo, go Bitcoin. We're on the way. We're on the way. Anyways, Ethereum in second place, catching up with its almost all-time high, very close now, at a price of 42.3398, 17.4% 7-day gain,
Wow.
at almost half a trillion dollars at 494.3 billion. If you guys are watching on YouTube, you can see it's going up, up, and away. Binance Coin in third place at 503.94, a 7.3% 7-day gain and $84.5 billion value. Holy crow. Cardano in fourth place at $2.25. Not its all-time high, but definitely coming back up from that really long fall over the last week. 2.6% in the last 7 days, $71.6 billion market cap. And not very far behind with Tether at fifth place. Of course, it's a stable coin, so it doesn't move much. Although if you're looking at this chart, you probably see there's a spike about an hour ago. Its market cap just shy of $70 billion. Solana has moved up a place from 7th to 6th, kicking out Ripple. Oh my gosh, Ripple has been kicked
Mm-hmm.
out.
Yep.
Solana is in 6th place, $185.64, a 25.1%. The top
That's
gain of the top
insane.
10. It is really doing well, and you can see it here in the far right-hand side. In the last 7 days, it is gained more than anybody except probably the difference for Cardano, since Cardano fell a long ways. But anyways, $55.8 billion market cap right now. And poor XRP Ripple has fallen to seventh place, $1.16 at the current price, 2.6% gain. Pretty sad, honestly, about the same as Cardano. Neither one of these coins is doing that great. Its market cap is currently 54.1 billion, not that far behind the Solana, but Solana is still winning. And Polkadot's in eighth place at 45.11, 8.1% gain in the last 7 days, and a $47.1 billion market cap. Dogecoin, weirdly enough, is in ninth place, up quite a bit, following its big partner Bitcoin, as it almost always does. 25.6 cents is current value, 10% double-digit gains. 7 days, and a $33.5 billion market cap. And then right behind that, of course, because it kicked USD coin out of 9th place, USD coin's currently at a flat price, of course, but $32.4 billion market cap. And I'm going to make mention that Terra, Litecoin, as I said, in the top 5 after the top 10, top 15, 11 through 15 here, Wrap Bitcoin and Shiba Inu, as well as Uniswap, are all kind of switching places with each other, but they are gaining more. When we first saw these top other 5, they were kind of like 11 billion, 12 billion. Now they're up to around, Terra's at 17 billion. It's definitely making a reach for USD coin. Still got a ways to go, but it's making the reach. And you can see if you're looking on YouTube, it is soaring, just like Solana, because it's tied to Solana.
That's crazy,
So
man.
it's the same thing for Avalanche. Avalanche is also tied to Solana and Terra, so it's also reaching for the stars. Anyways, I'm not going to go into it. There's plenty of coins doing very well. One of my favorites is up 300% today, or in the last 7 weeks, 7 days rather. Not going there. Anyways, let me get back to the updates here. I appreciate. Oh wait, nope, not going to do that part yet. The total market cap, $2.762 trillion, up 5%. And if you haven't already, please collect your candies. I have collected all mine for this week. How about you, John?
Right now I got 60. There it is.
There we go. Did his last bit. So one more 100 to go before you can collect your last. I guess we're off by one day. I collected my 100 today, and you're going to get yours tomorrow.
And
So
rewards?
check your rewards if you want to get. There wasn't. It's another NFT available, isn't there?
Well, there's this one here for 300 candies. CoinGecko X
It's just a
APY edition.
giveaway, though. Is that the giveaway?
Um,
The theme giveaway?
no, there's. Oh, that's a giveaway. Yeah, that's a giveaway. But there was.
Mini contest.
But there was another. Where's that other one at? Is it already done? It's probably done already, huh?
One we did earlier? Yeah, it may have
Yeah.
been already done.
Yeah.
Yeah, there's
Okay.
lots of discount deals, but there's not a whole lot of NFTs being given away. So if you want to get an NFT, you got to get in there quick and get your NFTs. So click on it, go through the process, get your reward. That last one was like $2,000, wasn't it? 2,100, I think it was.
I don't remember. I can check.
The one we got 2 weeks ago. Yeah. All right. Well, in any case, if you appreciate our content, please like and subscribe. If you're on YouTube, hit the notification bell. We post every Wednesday and Sunday. Today is Wednesday. Check us out on Discord. You can get a link in the description to join us on Discord and have a lot of fun. We have lots of different sections of crypto that we talk about. And if you would like to support the platform, please donate via Bitcoin, Ethereum, Binance, or Basic Attention Token, which is the token of creators. Check everything in the link below.
It's 1,500 candies. Yep. Thank you. All right, let's move on to the news. First news of the day, written by Jason Nelson. Andrew Yang and Bankless DAO release NFT to support Forward Party. Former President and New York mayoral candidate Andrew Yang is moving forward with this new Forward Party to help fund his third party, which seeks to reform the dysfunctional duopoly in the U.S. political system. He's revealed an NFT collaboration with decentralized project Bankless. Yang, appearing on October 18th edition of the Bankless podcast, told host Ryan Adams and David Hoffman that he wants to make the Forward Party the crypto party because he feels the two are strongly aligned. Quote, I want to make the case to legislators, Yang said, that crypto communities are a force for progress and innovation and a massive provider of jobs. Yang went on to say that he wants to help the political system, which he sees as failing and flailing, upgrade and modernize itself to memorialize the occasion. The team at Bankless chose the most crypto of methods. We thought that this was big enough deal to do some sort of historical commemoration. Bankless co-founder David Hoffman told Decrypt, and what else would that be other than NFT? Hoffman said that Bankless reached out to artist Crypto Zero X wife, who has worked on illustrations of Bankless memes in the past, and asked if she'd be interested in joining the project. Hoffman added that there is a lot of alignment between Yang's vision for the world and what crypto has to offer, and that many of his policies would thrive under a crypto paradigm. Andrew understands the crypto much deeper than the typical politician and understands that a lot of value and jobs are going to be created here, said Hoffman. The man is pro-innovation, and what industry has more innovation in it than crypto? Well, that's a pretty cool picture.
It is.
Yang said on Twitter today that all proceeds from the sale of the NFT called Forward would be donated to the Forward Party. Yang said he launched the Forward Party as an alternative to the current American political left versus right duopoly that has taken over. I also have a hope for a positive political movement that is not born of rage and demonization.
Demonization.
Demonization. Yeah, there you go. Yang wrote on the Forward Party website, but in optimism and solution. The Forward NFT is minted on Ethereum and listed on the Zora NFT marketplace. Bidding ends tomorrow, October 21st, according to the listings, and current highest bid is 1.5 ETH or $6,140.56 at the time of writing this article. Okay, cool. New party.
It's really cool. I'm glad. It's going to be interesting. I don't know if I would join the party per se, although I definitely say that my thoughts align with the ideals they're going for. So.
What's interesting about Andrew Yang is that he's actually been a crypto advocate for a long time, and not only that, he's been politically involved in New York for many years, and he's been really pushing that that vision in New York, because obviously New York is very strict with their crypto laws and regulations, and Andrew Yang's been the activist out there when it comes to politicians. So I definitely support the guy for what he's trying to do for crypto out there in New York.
Yep, same. Very impressed. Go Yang.
Yep.
Moving
Next
on.
news.
Flow blockchain now controlled by community, says Dapper Labs. This is an article by Andrew Hayward. Dapper Labs' Flow blockchain is one of the most prominent networks on the rising NFT market, powering NBA Top Shot, or to more than $750 million of secondary trading volume to date. As the firm expands into new NFT projects and other directions, it has also been working to further decentralize the Flow network. Now, a Dapper representative tells Decrypt that the Flow is fully open and controlled by the community, with the firm running less than 1/3 of the active consensus nodes that maintain the proof-of-stake network. The company claims that 68% of the nodes are now operated by external Flow validators. A proof-of-stake network, if you guys didn't already know, like Flow, operates differently from the proof-of-work, that is miners, approach used by Bitcoin and Ethereum. Rather than use energy-intensive mining, not like that's a bad thing, model, Flow relies on validators who have staked a significant chunk of Flow tokens and then earn rewards for processing transactions. Decentralization is critical to the security of blockchain networks, which are typically distributed across thousands of computers around the world. If a single entity controls the majority of mining, power, or validator nodes, then it could be possible to alter transactions and double spend coins, for example. This is the reason that Dynamo is awesome. We'll get to that later. Dapper Labs, whose future success as a company appears closely intertwined with that of Flow, now operates 32% of Flow's current nodes. That might not be a good thing. We've reduced the number of consensus nodes that Dapper Labs is running to less than a third, 32%, right? Flow project manager Lane LaFrance told Decrypt. That's enabling a lot more participation in the network for community members, and it's also a really important security metric to showcase that the network is run by the community, not by us. Dapper created Flow after its first NFT project, CryptoKitties, nearly crashed the Ethereum blockchain in 2017 due to overwhelming demand. The Vancouver-based firm didn't believe that Ethereum could handle its future ambitions for crypto collectibles, so it developed a bespoke proof-of-stake network that could handle more transactions at lower costs. Whether Flow truly is decentralized is a question that has hovered around Dapper since NBA Top Shot launched last fall, and especially since it exploded in demand earlier this year. LaFont said that amidst the process of progressive decentralization, the growth in validators has become both organically and via Dapper's own efforts to increase distribution of the network. Flow has been architected to be a completely permissionless, completely decentralized public blockchain, she explained. The bootstrapping process, though when code is early in its development, security is always something that you're testing. It's been part of the security hardening process to add in more folks into the community. Unique among blockchain networks, Flow splits its proof-of-stake model into 4 different roles for validators who can operate, collect, execute, verify, or consensus nodes. That opens up more opportunities for community participation without diminishing security or performance as a result. There's a tweet talking about this. I'm not going to go into the full of this. This is a fairly long article, but the end game is here that Dapper Labs is trying to distance itself from its own generated idea of the Flow blockchain on Ethereum so that it can do what the end goal of not just blockchain itself, but the decentralization and giving the power to the people instead of giving the power to a centralization. Because we already know what centralization can do. It can destroy and allow people's money and time to be squandered by one jerk. I'm not going to use a more foul word, but basically a hacker who is not just. I mean, sometimes hackers are good, sometimes they're bad. But the point is to get away from centralization so it doesn't corrupt intent of this idea. So
Well,
I appreciate that they're doing this.
I kind of wanted to go on a side tangent with that hackers are good and sometimes hackers are bad. I mean, I think in all, when you look at the wider scope, all hackers, regardless of the acts that they're doing, whether criminal or for the benefit of securing the network, um, their actions are just going to make those developers even better at coding. So I think overall, regardless of what they do, is better for the ecosystem of crypto. Does that make sense?
I would say that I'm not going to cop to anything I've done, but the ideal of white hat hacking is good. Black hat hacking is not good, and I get that people are curious, and I'm personally fine with that. You should explore, you should test, and yes, white hat hacking can certainly help, but black hat hacking isn't helpful. Yes, I understand they got into it with the idea, oh, I can exploit this. Great. You should just bring it up and tell the people you found a problem. Don't just steal their money. And I get it that sometimes you need to steal the money, or at least you think you need to steal the money in order to make a point. It will just get you in more trouble. Don't do it. Do it to the degree that it exposes the problem, reveal the problem, and then, But I mean, the other possibility is you could just not do anything and let it crash. Now, if you believe in it, probably going to be a white hat. If you don't, you're just going to steal something. I can't stop people from doing what they're doing. I can try to discourage people, but yes, it would improve the potential strength of the network if people revealed these ideas and stuck with the good reason for hacking. So.
Yeah. All right. Next news written by Jeff Benson. Jack Dorsey nearly predicted which Bitcoin block would include all-time high because he bought all the Bitcoins. Jack Dorsey, part-time Twitter CEO and full-time Bitcoin maximalist, cryptically tweeted yesterday 705742. Was it the salary of his mediation guru? The number of hairs in his ever-expanding beard? Perhaps it was a butt tweet. But when Dorsey responded earlier this morning to his own tweet by commenting off by 117, it became clearer-ish that the Twitter honcho was probably referring to Bitcoin block numbers. More specifically, Dorsey was predicting which block would include the new all-time high. The actual block, according to Dorsey and half of crypto Twitter, would be 705,859. The all-time high price of Bitcoin is now $67,276.79.
How much of that is just inflation because the U.S. dollar is overinflated?
Yeah, exactly. One Bitcoin still worth one Bitcoin. According to CoinGecko, as of last night, the record from April 14th of this year still stood $64,804.72. New blocks are added to Bitcoin about every 10 minutes, meaning Dorsey's apparent prediction missed by 1,170 minutes, or 19.5 hours. The actual time between blocks ended up being a few hours shorter thanks to a high hash rate. He thought all this would happen yesterday right after he first tweeted. In other words, hopes for a record price were indeed high yesterday as BTC lurked just beneath the $65,000 mark. By the way, I guess you can say I predicted that too because that's on my tweet as well, right? Come on, Decrypt. Why don't you give me the spotlight as well?
Yeah.
The first Bitcoin futures exchange traded fund from ProShares became available yesterday and registered nearly $1 billion in trades from traditional investors hungry for exposure to the asset. Of course, when the actual transition to a new high occurred depends on the source of the truth one uses. CoinGecko, CoinMarketCap, Messari, Nomics, and others all have slightly different figures as they use different data and exchanges. Actually, I noticed that as well. I was checking out multiple
exchanges,
I guess data aggregators and exchanges, and I noticed that that the prices were different by like almost $3,000 to $4,000. I was like, wow, that's quite interesting. It's a big difference.
Yeah, and that was what how do I put this exactly? If you're fast enough, you can trade the difference. There's still going to be a cost. So some people say if there's not a huge difference, it may not be of use to But I mean that's something that's been going on for years. People are like, oh, the price of the euro versus the price of the dollar. I'll just trade the difference, make money. Some people do.
Mm-hmm. As Decrypt noted last November, as Bitcoin was pushing past previous much lower highs, Messari's record featured a caveat. The all-time high, quote, is not necessarily the absolute highest single trade price due to the nature of the historical data we analyze. We are not always able to look at every trade for the asset. For some assets, the all-time high quoted may refer to the all-time highest daily average or a price sample on the day of the all-time highs occurred. And Dorsey, who has a history of posting provocative yet confusing tweets, wasn't specifying. Besides, as a Bitcoin believer, he should know better. 1 Bitcoin is always worth 1 Bitcoin. Ah, nice. Absolutely.
Exactly.
That's what I said, man. That's what I said.
Well, 1 Bitcoin's worth 1 Bitcoin. The question is, what is it worth to other people?
Yeah.
So, continuing on from Sander Lutz. Ethereum art collective Pleater DAO revealed as buyer of one-of-a-kind Wu-Tang album. Wu-Tang Clan's one-of-a-kind 2015 album, Once Upon a Time in Shaolin, has found a new home in the world of digital art. The album, first purchased by infamous pharma executive Martin Shkreli, then repossessed by the U.S. government after Shkreli's conviction for securities fraud, oh darn, is now in the hands of NFT investment collective Pleaser DAO. The group revealed itself this morning as the anonymous entity that purchased the album from the federal government in July at the hefty price tag of $4 million. Purchase fell in line with DAO's previous acquisitions. Pleaser DAO, a band of 70-odd NFT art collectors, first brought together in March by their shared admiration for the work and digital artist People Pleaser, has since focused on acquisitions and reflect values of transparency and anti-establishment activism. For instance, they bought Edward Snowden's NFT in April for $5.4 million. The Wu-Tang's album, which exists only as 2 hard copy CDs, was widely received as a protest against digitization corrosive impact on musicians and their ability to control their own works. The DAO, which features among its ranks such luminaries as Pussy Riot founders member Nadia, and now People Pleaser herself, wants to bring the album back to the people. Once Upon a Time in Shaolin, to achieve its goal as protest art, is intentionally wrapped in limiting legal restraints. It can't be commercially released until 2103. It can't be remixed or recorded, and it can't be played in front of large audiences, streamed, or even broadcast online. Pleaser DAO Chief Pleasing Officer Jamis Johnson told Rolling Stone that the group's priority is to bring the album back to the people. They plan on potentially curating listening parties across the world that would permit non-owners to hear the 31-track album while still honoring the extreme restrictions placed on the work. That an album originally created to protest the dangers of an increasingly digital world is now in the hands of pioneers on the front line of the NFT art world could be conceivably a point of tension. But Johnson doesn't see it that way at all. Of course he doesn't. He spent $5.5 million on the thing. They're Wu-Tang kind of OG DAO, Johnson told Rolling Stone. They're bonded together to form a collective more powerful than any individual had on their own. Wu-Tang's mission is the very same as Pleaser DAO's, and Johnson believes that the broader crypto community can fuck these middlemen for taking all the money that should be going to the artists perfectly aligns with the ethos of crypto. I think he's probably right about that.
Yeah, that's what happens when you're undervalued at the beginning and you become desperate as an artist and just decide to sign the contract when you have suits approaching you saying, hey, you have a good taste in music. How about we sponsor you? Just go ahead and sign your name on this dotted line and we'll give you, $2 million. Well, you know what, dude? I live in the ghetto. 2 millions would go a long way for me, my family, my kids, and my community. I would be very happy and very thankful. Unbeknownst, I'm selling my soul to the suits, meaning I have no rights to my own work. That's a shame, man. It's a shame. I was listening to Chappelle talk about that last night. He did the same exact thing when he had his show, and in fact, he's this is going off on side tangent, by the way. he was talking about the same thing. You know, I wouldn't be surprised if Chappelle does the same exact thing. What these guys are doing. Yeah.
Oh.
Yeah.
This is the ironically the Wayne's World story. The what's his name? I can't remember the name of the actor who plays the slime ball guy who buys their show for what, 10 grand, I think is what they actually paid Wayne and Garth. But it's time and time again, over and over. Hollywood's redone it so many different times and made money off of it. Made money off of the weak guy. But I mean, not to say that I'm the wealthy person, but I will give the executives only one caveat here. They have the money, and they have the ability to give you some of what you want. Maybe not control, which is what you ultimately want. But they're taking you out of what you don't want to be in. So it's like the one thing that I remember some people are screaming at other people like, sell out, and it's like, yes, but would you not do the same thing? Depending on your situation, would you not do the same thing?
Right.
Would you not sign the contract? Would you say, no, my morals are more important? Most people would probably, sadly, sacrifice their morals for the money. Not everybody. Most people do.
100-year contract, man. Who would have known? That sucks.
So, yeah. On to the next article.
On to the next one. Where we at? Written by Andrew Hayward. Why ARK's Kathy Wood isn't buying into the Bitcoin's future ETF. Oh, thank you, Kathy. You're the only person other than me that agree that this is a bunch of bull. Anyways, ARK. By the way, I was trolling Dynamo Coin's YouTube channel, talking about that same thing because they were just like everyone else right now in crypto is talking about Bitcoin's futures ETF, and I'm like, dude, no, that's the stupidest thing. Why would you want to do that? I mean, why are you going to pay a premium when you can literally spot trade on something like Binance or Coinbase or Celsius, and buy it for real-time prices instead of paying for an inflated price on top of that. Like, for example, if you're buying the ETF off of what exchanges I don't know, maybe Fidelity. I don't know where you get this futures ETF.
It sounds stupid to you and I because we're so involved, but it's not stupid to people who don't get it. I can't tell you the number of people who, even though after I give them a pretty simple explanation of crypto, still don't comprehend it. And that's what this is for. Futures ETF for Bitcoin is for people who do not comprehend Bitcoin and may never understand Bitcoin. They don't care. They know there's a value there. They just don't know how to get into it, and they don't want to think about it. So they're going to pay the premium so they don't have to think. Don't blame them for their stupidity. That's just them.
What we need is a Bitcoin spot trade ETF. We
need to make
that's more realistic because the spot trading is pretty much what you can correct me if I'm wrong. What Grayscale is doing. Grayscale is buying it's OTC. They're buying OTC prices, but for price at that time, right? Later, it will reflect upon the market, upon the actual crypto economy, what that price is, because Grayscale is actually buying Bitcoin. Now, this futures ETF is not buying crypto. All they're doing is just pegging a number and pretty much telling the people, hey, we got an IOU that's pegged to Bitcoin, and we're going to pay you back in fiat. They never touch Bitcoin ever. That's stupid.
Yep. No, yeah. It's the fact that this is the crossover between traditional finance and crypto. It's the start of what will inevitably be more ETF stuff and more forays into traditional finance. Obviously, we already know there's plenty of traditional finance people buying up crypto.
Yeah. Well, obviously it did a good thing for the economy. Obviously, it's doing something. But keep in mind that this future ETF, it's not the people that are buying this future ETF that's forcing the market to go up. No, it's the people that are in the Bitcoin economy that is buying more of it. Because, like you said, there's possibly predictions out in the future that there's going to be a better ETF coming out in the near future. There's a lot of them. We've talked about this on a previous podcast.
Like 15 or 20 of them. There's so many of them, yeah.
That there's gobs and gobs and gobs down the list that are just waiting to get approved. Anyways, Kathy Wood, here we go. ARK Invest CEO and Chief Investment Officer Kathy Wood is big on cryptocurrency, investing in Bitcoin as well as crypto-related stocks like Coinbase and the Grayscale Bitcoin Trust. But ARK isn't buying into the newly launched U.S. Bitcoin Futures ETF, not yet at least. The United States' first Bitcoin Futures ETF, the ProShare Bitcoin Strategy ETF, began trading Tuesday and racked up nearly $1 billion in activity by the end of the first business day, including $280 million worth within the first half an hour of trading. A Bitcoin ETF or exchange traded fund lets institutional and retail investors gain exposure to the leading cryptocurrency without actually buying and holding Bitcoin itself. Get slapped in the face for that. In this case, however, it's an ETF for Bitcoin futures rather than the actual coin, which means investors are buying shares that represent, slapped in the face again, represent contracts betting on the future price of Bitcoin. This is really upset. It's really triggering me. It really is. Asked if ARK invest in the ProShares Bitcoin Futures ETF at yesterday's Milken Institute Global Conference, Wood replied, no, we did not. One of the reasons is we're looking at this very carefully. She added that there are some tax ramifications we'd like to understand more, having to do with contango versus more normal backwardization. Exactly, that's slapped in the face again. She's smart. She's smart. Contango and normal backwardization are terms used to refer to the movement of prices over time on the futures curve. As Decrypt's Jeff Roberts wrote in this weekend's Roberts on Crypto column, such concepts can make futures ETFs like this one especially complicated for the average retail investor as opposed to professional traders. Wood, of course, is a highly successful veteran investor, but even she and ARK aren't quite ready to dive into the ProShares ETF investment. Not yet, she concluded. ARK Invest has its own Bitcoin ETF play in the works. Back in July, the firm joined the long list of companies seeking SEC approval to launch a U.S. Bitcoin spot ETF. Applause. Which is pegged to the current price of the coin, while similarly allowing investors exposure without actually buying and taking custody of the cryptocurrency. Okay. No spot Bitcoin ETF has been approved in the United States. A second Bitcoin futures ETF, the VanEck Bitcoin Strategy ETF, is cleared to begin trading next week on the New York Stock Exchange. ARK Invest has also lent its name to yet another Bitcoin's future ETF that is currently in the works. Bitcoin hit its all-time high price this morning amid excitement around the futures ETF launches, reaching a new high above $67,276 per data from CoinGecko. Okay, that was tough to read because I was triggered at that whole article. I really was. I don't normally get triggered with crypto stuff because it's all the same bull. I'm just like, okay, sure, whatever. It is what it is. I'm still going to hodl, but this really triggers me. It really does. But at least somebody like Kathy has their head on their shoulders and is not going to bow down and yeah, I was going to go too far with that. Yeah, not bow down and just,
no, I got
yeah.
Here's some booty.
Yeah. So
yep, I follow. Yeah, you're on board with. I mean, I'm not saying I'm going to buy any futures ETF stuff. I wouldn't. That's like I'm not even into Bitcoin fully, even though I used to own some of it. It's not really my thing. I realize it's a store of value, but I don't care much about it. And I know that sounds strange for a crypto enthusiast, but it's just my opinion. Yeah, the other ETFs that we're talking about are coming. This is just the first foray. You got to start somewhere. So
this is what Gary wants, man. Gary wants people to pay more taxes. Buy the fake Bitcoin. You'll never have the real stuff, but you know what? You're still gonna pay taxes, man. Uncle Sam wants their share.
Yep, Uncle Sam always wants his share. That's correct. Moving on to Andrew Asmakoff's Australian lawmakers want crypto framework that recognizes DAOs. The Australian Senate's Select Committee on Australia as Technology and Financial Center, ATFC, has today presented its final report outlining its recommendations for a clear regulatory framework for the digital assets sector in Australia. Is that not cyclical sounding to you?
Yeah.
The report includes... Yeah, it was very extra wordy unnecessarily. The report includes a total of 12 recommendations, including the establishment of legal structures to recognize DAOs, or DAOs. Based on advice from crypto firms and organizations, including Swyftx, Ripple, R3, Blockchain Australia, the authors of the document stressed that any future regulatory framework should be technology agnostic and should not explicitly or otherwise endorse any particular technology, like pencils or paper or things like that. Anyways, in practical terms, this means that financial services using digital assets should not be treated differently from traditional financial services. And I don't believe that's a good idea, but they'll figure it out. We propose that the Australian government aligns digital asset regulations with requirements imposed on the same asset in the traditional form, with a principle of, quote, same risk, same activity, same treatment. R3 proposal reads, creating DAOs. One notable recommendation calls for the Australian government to establish a new structure for decentralized autonomous organizations that would be recognized by the Corporations Act. If you don't know what this is, it's because you don't live in Australia. A DAO is well, you know what a DAO is. I'm not going to go into that. Some jurisdictions have already started to develop legal structures for DAOs, with Wyoming becoming the first U.S. state to recognize DAOs as a legal entity in July of 2021. Other key proposals in the report include the establishment of a new licensing regimes for crypto exchanges and custody providers, as well as a detailed token mapping exercise to classify digital assets in the best possible manner. I think that's not a bad thing there altogether. Additionally, the report highlights the need to ensure that current anti-money laundering, or AML, and counterterrorism financing, CTF, regulations do not undermine innovation, and that capital gains tax, or CGD, regime be amended in such a way that digital asset transactions only generate CGD event when they genuinely result in a clearly definable capital gain or loss. That is brilliant. I'm glad they're thinking about that. The report also recommends a company tax discount of 10% on crypto mining operations, yay, if miners source their own renewable energy for these activities, yay again, and the elimination of debanking, or the practice of banks closing the accounts of businesses they perceive to be high risk. Also, another yay. Thank you, Australia. I might be moving my operations.
Yeah.
If approved, this comprehensive crypto framework will drive investment of jobs into Australia, I just said, and ensure the country's leading roles in the digital asset space. Andrew Bragg, a Liberal Party senator and chair of the committee, said in a statement. Australia can be a leader in digital assets. This means Australians can access new choices and lower prices. It means Australians can have more control of their financial destiny rather than being dependent on the endless intermediation, said Bragg. He's not bragging. The authors of this report also noted that the above recommendations are becoming even more relevant, considering that Australia is one of the world's most significant adopters of cryptocurrencies on a per capita basis. This report cites survey data showing that 17% of Australians currently own cryptocurrency, with a further 13% of respondents planning to buy digital assets in the next 12 months.
Nice.
So yeah, go Australia.
Cool. Yeah. That's a good article. See? That balanced the last article. The other one was just, I was ready to break my laptop. All right, cool.
I'm sorry, man.
Let's go to the next one to see where we at. SEC clears VanEck to launch Bitcoin futures ETF next week. Written by Matthew DiSalvo. A new Bitcoin futures exchange traded fund ETF is set to start trading on Wall Street next week, according to a Wednesday's SEC filing. New York-based asset management firm VanEck Bitcoin Strategy ETF will go live on the New York Stock Exchange after October 23rd, the filing said. Trading of VanEck's ETF will begin as soon as practicable after the effective date, which likely means Monday, October 25th. The first Bitcoin-related ETF in the U.S. launched yesterday and was hugely popular. ProShares Bitcoin Strategy ETF traded $280 million worth of shares in 20 minutes by the end of the trading day. Nearly $1 billion had been traded. VanEck's products will be the same type of ETF, one that gives investors exposure to the world's biggest cryptocurrency by allowing them to trade shares that represent contracts betting on the price of Bitcoin. Futures contracts are financial contracts contracts the value of which it depends on or is derived from the underlying reference assets. The filing reads, in the case of Bitcoin futures, the underlying reference asset is Bitcoin. It added, Bitcoin and Bitcoin futures have historically been more volatile than traditional asset classes. You should be prepared to lose your entire investment. Sure. Yeah. Do I need to read any more of that? No, let's read this last little paragraph here. While not a true Bitcoin ETF, investors are seemingly still interested in a futures ETF. These type of funds still provide investors with exposure to cryptocurrency without having to buy, sell, or store it themselves, which can be tricky for those not familiar with exchanges or wallets. The SEC is expected to approve another 4 Bitcoin futures ETF in the coming weeks. The Invesco Bitcoin Strategy ETF, Valkyrie Bitcoin Strategy ETF, the Galaxy Bitcoin Strategy ETF, and Advisor Shares Managed Bitcoin ETF. I'm curious. I want to look a little deeper into those ETFs and see what's going on in them. Because I know that it's not just, even though they have Bitcoin as a title, there's other cryptos, like let's say for example it's like 60% Bitcoin and 20% Ethereum and like 10% Litecoin, 10% Dogecoin or whatever. Yeah, like the strategy ones. Yeah.
Yep.
Anyways, yeah. Gary Gensler, keep it going, man. I think he's in a good mood. He's getting paid. Somebody must have tipped him off.
This is the Bitcoin is preferred inflation hedge over gold. This has been predicted for a while by Tim Hickey, Paul Tudor Jones. Bitcoin hedge fund manager Paul Tudor Jones thinks Bitcoin is winning the race against gold, according to an interview on Wednesday with CNBC. Host Andrew Ross Sorkin reminded the billionaire American investor, whose company controls close to $40 billion in assets under management, that when he last appeared on the show back in June, Tudor Jones had called Bitcoin a hedge against inflation. Tudor Jones, sounds like a funny name, sorry, doubled down on his earlier comments today, replying Bitcoin would be a great hedge. Crypto would be a great inflation hedge. Sorkin then turned to Bitcoin's recent explosive prices performance, asking, is it still a hedge at these prices? Listen, I've got crypto in single digits in my portfolio. It's more than me. I have a small trading position at our fund. I do think we're moving into an increasingly digitized world, said Jones. Clearly there's a place for crypto, and clearly it's winning the race against gold at this moment. So yes, I think it would be a very good inflation hedge. It would be my preferred one over gold at the moment. When Jones last locked horns with Sorkin on Squawk Box, the investor told CNBC he recommends a 5% position in Bitcoin, adding that he likes Bitcoin as a portfolio diversifier. Back then, the Tudor CIO described his position as a defensive position for myself personally and my family that I don't even look at anymore. But he tempered his enthusiasm by adding his concerns about Bitcoin's mining carbon footprint. If I was king of the world, that's a terrible way to start a sentence, I'd ban Bitcoin mining just because of the environmental impact, and then make the ecosystem figure out a way to do it without expanding the supply of it anymore at all.
What?
Tudor James. Yeah, I know, it's dumb. Tudor Jones is one of the many executives at a large investment company who are now encouraging clients to diversify their portfolios with crypto. Surprise, surprise. No, it's the money. It's all about the money. He's a billionaire. Of course he's about the money. Back in January, Guggenheim CEO Scott Minerd, or is it Minor D? No. whose firm stewards $325 billion, gave Bitcoin a $400,000 price projection and admitted that some of Guggenheim's private funds had already bought it. Rick Rieder, CIO of the world's largest asset manager, BlackRock, which controls over $9 trillion in assets as of June of this year, said in February that the company was starting to dabble in Bitcoin. By the end of the summer, SEC published a filing revealing that BlackRock had invested in 2 U.S.-based Bitcoin mining firms. Today, Bitcoin picked up its bull run, hitting an all-time high. Well, their number is wrong, but we know what it is, 67,000. According to CoinGecko, the record comes hot on the heels of pro shares, yes, ETF futures, blah, blah, blah. We know this. No wonder, then, that CIO like Paul Tudor Jones, Scott Minerd, and Rick Reeder are all watching eagle-eyed. They want more money. Because the assessment of one's value, and I don't mean monetary, but the assessment of one's value in the world, which can't be measured with dollars, is how many dollars do you have?
Yep. All right. Let's see what is next. Next, we have what Ethereum reclaims $4,000 for the first time since May. A quick little, let me just, not the whole thing, just a little snippet. Ethereum, the world's second largest cryptocurrency with market capitalization, has hit $4,000 for the first time since May 14th. Its current price is just over $4,000, an increase of 4% in the past week. The latest bull run is the result of the second win for non-fungible tokens, DeFi protocols, and the United States' first Bitcoin's future ETF. I'm going to scroll down to the bottom here. Ethereum-based NFTs, cryptographically unique tokens that can be used to prove ownership over digital content, has proved particularly popular with artists and creators. Big players are starting to take notice, with auction house Sotheby's launching its own metaverse marketplace, and 1.4 million users signing up for the crypto exchange's Coinbase's NFT platform. In recent months, NFTs have also taken on a social dimension, which collections such as CryptoPunks and Bored Ape Yacht Club forming the nucleus of new communities based around NFTs. Just last month, Sotheby's auctioned a collection of cartoon ape profiles picture NFT called Bored Ape Yacht Club. Bored Ape Yacht Club for an easy $24 million. Yeah.
Yep. Ethereum, it's up.
It is, yeah. All right, next one.
Continuing on, Bitcoin price hits new all-time high amid futures. We just skip this over. We already talked about this 3 times. Bitcoin edges toward all-time high, lifting Coinbase, Square, and crypto stocks. I don't know if that needs to be read either, because it sounds like the same thing.
Okay, let's go to the next one then.
China pushes McDonald's to expand digital yuan scheme before Olympics. Oh, that sounds like some real juicy stuff there from Stephen Graves. China, I almost cringe at saying that word, has told fast food chain McDonald's to expand a trial of its digital yuan payment system before the Beijing Winter Olympics kicks off, according to sources quoted by the Financial Times. The country's central bank digital currency, CBDC, known variously as the digital yuan, or eCNY, or eRMB, or eRenminbi, or the digital currency electronic payment system, is currently being trialed ahead of the full-scale launch planned to take place around the Beijing Winter Olympics in February of 2022. As part of the pilot scheme, yes, it's coming up, 5 months. Digital yuan wallets are currently being tested as a mean of payments at the 270 McDonald's stores in Shanghai. Now, according to the Financial Times sources, the Chinese government is urging the company to roll the payment system out more widely and is pressuring other retailers like Nike and Visa to follow suit. Both Nike and Visa declined to comment, while a McDonald's spokesperson stated that Shanghai is our pilot city and we will learn from customers' response there. According to a source close to China's financial regulators, the state-owned Bank of China, one of the sponsors of the Olympic Games, if that makes sense, I guess,
of course,
is behind efforts to get merchants in the Shanghai area to sign up for the digital yuan program, but noted that they are free to refuse if they like. They're free to refuse if they don't mind their families being locked up in prison for the rest of their lives.
Sure.
First proposed in 2017, the digital yuan has been on trials since 2020 with the People's Bank of China, PBOC. It still sounds like Winnie the Pooh to me, I'm sorry. Airdropping millions of digital yuan to citizens by July 2021. Over 20 million digital yuan wallets had been set up. That's an interesting way of doing it, with the country preparing for a full launch of the CBDC around 2022. We just said that part. It's currently one of the furthest advanced central bank digital currency projects in the world. CBDCs are similar to stablecoins, being pegged to the fiat currency, but with the crucial distinction that they are backed by the states, or, well, the government. They are also different from cryptocurrencies in that they aren't typically based on decentralized blockchain, with the ledgers that record transactions being instead controlled by the central bank in question. Indeed, it's been argued that by some analysts that China's summer 2021 crackdown on Bitcoin was at least partially motivated by the desire to keep the decentralized rival to its digital yuan in check.
Didn't I say that?
Abroad, pardon?
I did say that. I said that on a
Yeah.
previous podcast.
This is true. They don't want competition, but that's been true of everything that China does.
Right.
Abroad, the reaction to China's digital currency efforts has been mixed, and not surprisingly. In the U.S., a trio of senators have urged the U.S. Olympic and Paralympic Committee to forbid American athletes from receiving or using digital yuan during the Beijing Olympics, citing its potential to be used to surveil Chinese citizens and visitors to the country. This is also true.
Absolutely.
Meanwhile, proponents of the digital dollar have urged the U.S. to press ahead with its own CBDC to maintain the important role of the U.S. dollar in the global economy. Now, I kind of agree with that. I'm actually for the U.S. going with a CBDC that is entirely dollar-based and not blockchain-based, because if they're going to do something central, you just stick to the central method and don't try to do it with blockchain. We already have a bunch of stable coins. I know it sounds weird, but I'm trying to keep it separate because Bitcoin and Ethereum and all the other the things that actually are crypto, they're going to take over regardless of what these dumbass things are doing. The CBDCs, it's not going to work. It's going to work for a while. It's going to be a thing, and I'm fine with that thing existing. Because we need a contrast so people can see how stupid it is.
Okay. Yeah.
But
my fear about the CBDC is that when it does come to fruition, and it will, is that by the time that the citizens of these nations around the globe realize what's going on, it might be too late to backtrack. One of the biggest issues, one of the biggest concerns that I have is that privacy is the new oil, right?
Yeah.
Who's getting more data? Is China getting more data from people? Is America getting more data from people? That's what it's about. And CBDC with data tracking, that's scary, dude. You already have China doing social crediting. If you cross the road if you cross the street, if you walk across the street at a red light, dude, you will be forbidden from traveling out of the nation. You won't be allowed.
You can be, yes, you can be. If someone reports you, that certainly can happen, and I've
not,
already seen articles of it happening.
The thing is, it's not that somebody needs to report you. Is that their artificial intelligence is so advanced in China that there's so many cameras that you don't have privacy in China anymore. There's eyes everywhere. All these cameras are everywhere. So if you do something illegal and it's captured by artificial intelligence, it's gonna ding you automatically. It identifies you. I was checking out this documentary about the advancement in China. It's super advanced. It's so crazy what this artificial intelligence does that you don't need people to manage it. Obviously, you need the manpower to update their servers, their server warehouses. But other than that, the artificial intelligence is so advanced that it sends these fines to people. It's so crazy. It's so crazy, man.
And CBDC, you can get out of it. You can get out of it. You can basically give up your money and over time build your credit back up again so that you can. But it is the police state.
What I'm trying to get at
the police state that China has created is not good.
But once CBDC comes to fruition and people start migrating towards that, that's the fear that I have. Is it going to be too late to back out once you're too far down that rabbit hole? Does the government have complete control over you?
Yeah, to some degree. What's the best way of putting it? Having worked in multiple data centers in my time, I know exactly how much the government has access to the back end of the data of the websites you access. So if you're posting anything at all, and I'm not saying you, John, but listeners, if you're posting anything at all, particularly personal information, and you are, to things like Facebook, the government has that information. And I'm not just being conspiracy weird wacko. They have that information. I know they have that information because I worked in those companies before. Not Facebook explicitly, but other companies similar. So, do they have the information? Yes, they do. Do they want more information? Of course they do. It's all about control. It's not about money. But I mean, yes, it's partially about money, but yeah, for China, it's about controlling their population to the nth degree. Literally down to the nitty gritty, and knowing every little thing about every single person, so that they can literally control everything. I mean, I hate to say it, but 1984 was correct.
Yep. Data collection is the new gold.
Yes, and it has been since Google started. It's not new.
Right. Exactly. Yeah, you're right. But it's been massively ramped up as.
That's why Facebook is free.
Yeah,
that's why Google
nothing
is free.
in the world is free. Okay, I agree with what you're saying, but people need to realize that there's no such thing as free. Somebody's making money off of you. When how much did Facebook go for once they went onto the market? I forgot what it was, in the billions, right? It was in the billions.
Oh, no.
Where did they get that money for providing you free service? That doesn't make sense, right?
Your data is their gold, their digital gold.
Yeah.
Your data, because we're getting way off track, but
right,
I mean, basically, this is the point of why China is pushing McDonald's to expand its digital yuan thing before the Olympics, because they know that they will get more than just their own citizens entrapped by the system. So
stay away from CBDCs. Fear CBDCs. CBDC is the devil. Yes, I said it. All right, buy crypto. Anyways,
save your money in your digital mattress.
Buy Dogecoin.
Yeah, that's a safer bet than CBDC.
All right. Animoca Brands raises $65 million from Ubisoft. Others for NFT gaming push. Written by Andrew Hayward. Animoca, is that right? Animoca Brands could be one of the biggest winners of the rising NFT market, placing early bets on Dapper Labs, OpenSea, and Axie Infinity creator Sky Mavis before each firm saw surging success. Now, Animoca has more than doubled its own valuation with a new funding round just months after the last one. Today, the Hong Kong-based firm announced a new $65 million funding round that values it at $2.2 billion, a sharp increase from the $1 billion valuation when the company last raised money in July. Earlier this year, Animoca pulled in $138.88 million across two funding tranches from investors including Coinbase Ventures and Samsung. Why raise more money now? Yatsui executive. Huh?
Why not?
Yeah. Yatsui, executive chairman of Animoca Brands, told Decrypt that it wasn't about the money. The firm saw additional interest from prospective investors who didn't realize Animoca was raising funds, he said. And Animoca saw an opportunity to forge alliances with major players in the traditional gaming space, such as Ubisoft and mobile publisher Com2uS. While it was a slight premium to our last valuation, it wasn't about the valuation. It was about bringing people in and forging new alliances with the right kind of parties, said Sui. I can definitely assure investors that we haven't spent it all yet, he added with a laugh. Out of all the major traditional video game publishers, Ubisoft is already by far the most active in crypto space. The Assassin's Creed and Just Dance publisher has supported an array of crypto gaming projects, including Axie Infinity and Nine Chronicles, as well as incubated startups in its Entrepreneurs Lab program, and launched its own experimental NFT projects. Investing in Animoca Brands, Sui said, sees the gaming giants going past the flirting stage and pulling the trigger for the first time. He said that Animoca will work with Ubisoft and Com2uS on future NFT-centric projects, and that he believes this will be the start of a more active investment from Ubisoft in the crypto space. Quote, I think this won't be their last investment, which is positive as well, because it means that they're now wanting to see more things and grow the space, said Sui. The powerful thing is that that is the signal to others established players as well. They're going to go, wait, Ubisoft is looking at this? Now I need to start taking this seriously.
Exactly.
Yeah, see, scroll on down. Yeah, we'll leave it at that. Okay, cool. There it is.
Another Chinese firm making money for motherland. Oh, wait. Anyways. FCA launches TikTok YouTube campaign warning young people about crypto. Ooh, the UK's Financial Conduct Authority, that's what FCA stands for, has launched a TikTok and YouTube campaign to warn young people about the risks of investing in cryptocurrencies, per iNews. We want to create confident consumers. The campaign is about empowering young investors, not inhibiting them. That's good to hear. Executive Director of the FCA, Sarah Pritchard, reportedly said, we don't believe that the actions of many of these new investors reflect what they describe as their tolerance to risk, Pritchard added. As part of the FCA's initiative, the regulator surveyed young investors between 18 and 40. Wow, 40 is young. Okay. Who have invested in high-risk assets. More than three-quarters of respondents, 76%, reported that their investment decisions were based on being competitive with friends or family. 60% of those invested in high-risk assets said that they want stable returns. Well, they did the wrong thing. We don't want to limit choice. We are just asking investors to pause and consider. Are you prepared to lose all your money? If the answer is yes, then fine, Pritchard also said. This isn't the first time that the FCA has raised red flags about cryptocurrencies. As early as January of this year, the FCA was urging consumers to conduct appropriate due diligence before investing in cryptocurrencies. A consumer warning published in January 11th, 2021, listed 5 concerns about crypto. The concerns focused on price volatility, a lack of consumer protection, product complexity, charges and fees, and misleading market materials. That's more than 5 things. Nikhil Rathi, FCA CEO, I have a CEO? I thought this was a government-run thing. Anyways, reiterated the regulator's stance on crypto last month, saying that FCA has warned repeatedly investors in crypto products must be ready to lose all their money. I think I've been preaching that for years. The FCA has also taken aim at Binance, one of the crypto industry's most well-known exchanges. This summer, FCA told Decrypt that it had a huge issue with Binance's apparent lack of headquarters. Yeah, we remember that one. We read that one. And also said that a consumer warning issued against Binance Markets Limited, BML, or issued this warning rather, a UK-based Binance entity was based on AML concerns at the firm. Anyways, I'm not going to go to. There's only one more paragraph, but the point is, the FCA is basically saying, hey, people that are investing and don't have any experience in this thing, you should probably be wary with your money and not throw it all into crypto, because you know what, you could lose it all. But I think the thing that people are basically saying to FCA is, yeah, but we could also win. I mean, I won't dismiss the fact that a lot of what I said on my channel, on my YouTube channel, was along these very lines. I reviewed what are called high yield investment programs, or hypes, and they're all insane. None of them are real. No matter how much they say they are real, they're not real. And I would put small amounts of money in, like $10 or $10, and watch it. If it stuck around and doubled my $10 to $20, I pull it out. But usually within the first month to 3 months, those high yield investment programs would just disappear, just like some of these DeFi projects are. And there was one that did stick around. It stuck around for almost 10 months. And then the rug was pulled. And I had so many people, in March of 2020, were telling me I was an idiot for saying that this project was unreal and untrue. And I'm not saying they didn't make money on it. People definitely made money. I doubled my money on it too, and I put down several $100s. But I took it out as soon as it doubled, and that took, I think, 20 weeks. Doubled in 20 weeks. It was a little less than half the year. And I took it out, and I was like, I'm not staying there. And when it crashed, I think it was in late November of 2020, I did not say I told you so to anyone, because I already said it. This is a lie. It's not going to happen. It's not going to work. The point is, crypto is a thing and is a real thing. Yes, of course there are possible negatives that you could get yourself in trouble with. Yes, it's absolutely possible. Bitcoin, not think you're probably too worried about that. But the advice I always gave people on my channel was, as a rule of thumb, only play with 10% of the money that you have as a total. So let's say you had $1,000, only play with 100. Doesn't sound like a lot, and you're not going to make a lot, but you're also not going to lose a lot. You're only going to lose $100. And you may not even lose $100. You might just maybe that value will get cut in half down to 50. Okay, now you lost $50. That's not so bad. If you have 5,000, only play with 500. But don't go from the standpoint of I'm willing to lose 60% of all the money you have, because when you do lose 60% of all the money you have, you don't have very much money left.
Yeah.
And it's again and again and again and again and again, and I still saw people do it. It's like, all right, it's your money. I'm sorry. The thing that bugs me, and I'm not trying to make this rant too long, is that in the United States, you're not allowed to be a big-time investor at all unless you have a certain specific dollar amount to your name. That is, either you make, I think, $250,000 a year, or you have $70,000 in cash to which you owe nothing. That is, you have no debt and you have $70,000 at least in cash sitting in a bank account somewhere. If you have that, then you can invest more than that 70. That's in the 70 has to stay put. You can't invest it. You can invest more than that. Or if you, like I said, you make $250,000 a year or more, then you can invest in large projects. But I don't appreciate. I know why they put that in place. I know why the U.S. government said accredited investor qualifies in this manner. I know why they did that. But I think the rules that they put in place, like the FCA is trying to do with this, are folly. I think they should just make recommendations like, oh, you can't borrow on margin unless you put this money aside, and you don't need it for anything.
Mm-hmm.
Right? 10% people don't play with more than 10%. It's like going to the casino. Don't play with more than 10% of your total value.
Yeah.
Please don't do that.
Yeah, don't get greedy in crypto, man. Do not get greedy.
I mean, the best way, I would always encourage people to do this. If you want to do this, invest in some mining equipment and go out there and mine this stuff. Mine it, and that way you have a sunk flat cost. You don't have to worry about your money go up and down. And if you make some money off of it, great.
Or
you can even sell that equipment when you're done with it.
Or buy some stable coins and leave it on Celsius and earn a
right.
good.
But none of this is financial advice. We're just trying to tell you what we've done.
Right.
You do your own research.
Sure. Absolutely.
So.
That reminded me of what you're talking about earlier, your story. Like BitConnect was one of those rug pulls, man. I know a lot of people that got suckered on that one.
Screwed. Yep. They put all their money in and they lost all their money because it was always a ruse. If you only put 10% of your money into BitConnect, you only lost 10% of your money.
Yep.
And you protected yourself. I said that the concept that I think the better thing that would be for the government to do is just teach people how to invest. And then let them go off and do it themselves.
Sure.
If you end up losing all your money, that's your damn fault. And I'm sorry that you're now in poverty because you foolishly didn't follow the rules that we created to help you survive. Listen to the people who are doing this. Don't invest. Don't, it's the free lunch concept. There's no such thing.
Right.
As much as it sounds like it's real, there's no such thing.
Right. All right. We got one more article for today, but Jake, do you mind looking further back to see if there's any other good articles? I see one right below that from Celsius. I want to check that one out. If you can skim through that one while I read this one. All right. Andrew S. McCobb wrote, short seller research firm offers $1 million bounty to uncover Tether's true backing. Hindenburg Research, a financial research firm focused on short selling and exposing fraud, has announced a reward of up to $1 million for exclusive details on the supposed reserves backing Tether, USDT, the world's largest stablecoin. The firm said that Hindenburg's Tether bounty program aims to uncover information leading to previously undisclosed details about Tether's backing, as the disclosures around its holding have been opaque. Tether Limited, the issuer of the stablecoin, has historically claimed that each USDT is pegged at a 1-to-1 ratio to the US dollar, though critics have repeatedly questioned this claim. Earlier this year, the firm revealed that as of March 2021, only 76% of its reserves were held in cash and cash equivalents, with the remainder of the reserves allocated to secured loans, bonds, and other investments, including Bitcoin. A subsequent assurance reports released in August indicated that a mere 10% of the stablecoin's backing comes from cash and bank deposits, with nearly 50% of the reserves, or more than $30 billion, were held in commercial paper, a form of unsecured short-term debt issued by a corporation. We feel strongly that Tether should fully and thoroughly disclose its holding to the public, said Hindenburg Research founder Nathan Anderson, In the absence of that disclosure, we offered a $1 million bounty to anyone who can provide us exclusive details on Tether's supposed reserves. This is not the first time that the stablecoin's backing has been questioned. The announcement of the Hindenburg's Tether bounty program comes hot on the heels of Tether's being slapped with a $41 million fine by the Commodity Futures Trading Commission, CFTC, for providing untrue statements about its fiat-backed reserves. According to the regulators, for the majority of the period between June 1st, 2016 to February 25th, 2019, Tether's cryptocurrency was not fully backed by the US dollar, as the firm claimed. Further, the stablecoin provider didn't disclose the fact that it included many non-fiat assets in its reserves. Crypto exchange Bitfinex, which is Tether's sister company, was also hit with a $1.5 million fine for allegedly letting American residents buy and sell Bitcoin and USDT without having registered with the CFTC. To add to the controversy, Alex Mashinsky, the CEO of crypto lending platform Celsius Network, recently alleged that Tether is now issuing its dollar-pegged coins in exchange for cryptocurrencies like Bitcoin and Ethereum, which, if true, violates the firm's own terms of service. Update October 20th at 10 a.m. Eastern Standard Time. A spokesperson for Tether sent Decrypt this vociferous. I've never heard that word before. Vociferous response to the Hindenburg bounty announcement. Quote, "This stunt from Hindenburg Research is a pathetic bid for attention while others are making real change and building wealth and results," Tether said. They attempt to discredit not just Tether, but an entire movement. Thankfully, everyone sees through their opportunism as Bitcoin approaches another all-time high. This is not the first time Hindenburg Research has orchestrated an apparent scheme in pursuit of profit, nor will it be the last. Tether abhors and denounces their actions and transparent motives. Tether's history of always honoring our customers' needs while navigating developing regulations and industry norms shows our primary commitment to our stakeholders through trust and innovation. Tether is a trailblazer, a special breed in business, and we have big visions for the future. Like those that came before us and those who will come after, we are scrutinized more than others, and especially our peers and competitors. But we understand our role and responsibility and will continue to focus on our customers' requirements and defending the crypto markets. Wow. Holy mackerel. I wonder who wrote that. That's interesting, man. They're spitting fire now.
Want me to go through this Bitcoin lender Celsius thing?
Yeah, go ahead.
Okay, so by Jeff Benson. This is not from today, but yesterday. Bitcoin lender Celsius denies receiving cease and desist from New York Attorney General. Celsius has denied receiving a cease and desist letter from the New York State Attorney General, Letitia James, a day after James directed two unmanned crypto lenders to stop operating in the unnamed. Sorry, thank you. It's not unmanned. Unnamed operating from in the Empire State within 10 days, as requested. 3 more to provide information by November 1st. Celsius has received a request for information and not a cease and desist from the New York authorities, it wrote in its Medium blog today. In a press release yesterday, the New York Attorney General office took aim at crypto companies and that have not registered securities offerings under New York's Martin Act. The press release was accompanied by 2 cease and desist letters, which identifying information about the companies redacted. However, the NYAG has named the files Nexo letter and Celsius letter, strongly suggesting that these 2 were the crypto lenders being asked to shut down. Celsius competitor Nexo yesterday confirmed receiving the order, but called it a mix-up. Nexo is not offering its earned product and exchange in New York. It also makes little sense to receiving a cease and desist order for something we're not offering in New York anyway. a spokesperson said. It vowed to engage with the NYAG and seek clarity. Celsius is fresh off the $400 million funding round after being valued at more than $3 billion. This despite cease and desist or show cause orders from the state securities regulators in Alabama, Kentucky, New Jersey, and Texas, all of whom have targeted crypto lender BlockFi. The startup, which uses the slogan "Unbank yourself," yes, they do, also allows people to earn interest on the cryptocurrency they hold, and not just a small amount. It advertises up to 17% annual return through the rates, though the rates and varying depending on the asset. In addition to mainstays such as Bitcoin and Ethereum, users can also deposit the native Celsius token, stablecoins, and a slew of other crypto assets. Celsius then lends those coins out and gives depositors a cut of the action. Yield products such as these are classically classified as securities both at the federal and state level, as James alluded to in her statement. Though that doesn't mean that these companies will go down without a fight. Coinbase, which was planning its own lend product, suggested it would be willing to go to court if necessary after the Securities and Exchange Commission reportedly threatened a lawsuit. Coinbase ultimately dropped the product. According to the NYAG letter requesting information, the office wants to know company information, including legal names, subsidiaries, and headquarters. Also wants product descriptions and explanations of how the digital assets are custodied, pooled, and loaned out. Celsius said, "We are now working on providing regulators in New York with information about our businesses on offering." It added, "We expect additional U.S. states to reach out to Celsius requesting this information."
You know what's stupid about this? Is that you can literally go to the website right now. I can show you guys. I can go to the website right now. I'm not going to do that because we've been on for over an hour. But it's all transparent. The records that they filed are there. They're publicly. You can go to the website right now and check that out. You can see the names, the subsidiaries, and the headquarters. The address, everything's there. It's all there. What the hell, dude? Go to the website. It's there. It's transparent. That's what I love about Celsius. It's all transparent. Slap yourself.
It's unfortunate.
Anyways, let's see if there's anything else.
It's just like the SEC being strong arming these companies into getting into line when to some degree they're not going to ever be able to get into line because of what the nature of cryptocurrency is. But at the same time, it's kind of the first step. The government's kind of like, hey, stop effing around. We just need you guys to do the right thing. And the companies are like, we are doing the right thing. And they're like, okay, next step, we'll see what the next step happens to be. It's probably going to be regulation of some sort. But the companies are kind of like, this is the growing pains of the new currency. The new currency does not subscribe to the traditional financial methods. And even though I believe that Elizabeth Warren has a noble cause at the head of what she's trying to do and protect people from themselves, I still don't agree with her ultimately, unless it literally is just for protection. Like, oh, we need to protect people. We should just inform them. Let them know. Mm-hmm. This is what this thing is. And then people will be less inclined to be stupid. But there's lots of things that cause people to be stupid, and we haven't stopped those since. We tried in the 1930s to get people to stop drinking. What happened there? So.
Mm-hmm. There's another article I want to read here that we haven't read in a long time because there hasn't been really a fresh update, but there's a couple articles here about the Facebook's crypto wallet, the Novi wallet. There's two of them. I don't know which one to read. Facebook turns to Coinbase, Paxo for Novi crypto wallet, or the let's see, where's it at? Where's it at? Where'd it go? Was that it? Yeah. Oh, here we go. Elizabeth Warren urges Zuckerberg to halt Facebook's crypto wallet Novi. Maybe I should read this one.
Okay.
Written by Sander Lutz. Elizabeth Warren urges Zuckerberg to halt Facebook's crypto wallet Novi. Hours after Facebook went live this morning with its digital wallet Novi, Senator Elizabeth Warren and four other senators from her party sent a warning shot at the company's CEO Mark Zuckerberg, demanding that he immediately discontinue the program. Novi launched a pilot this morning in the US and Guatemala, allowing users to buy and trade Paxos dollars, USDP, instantly with no fees. Coinbase is providing Novi with crypto custody services and will hold all funds involved with the program. Notably, Novi does not incorporate Facebook's own long anticipated cryptocurrency Diem. This does not appear to have mollified the groups of senators who also include Brian Schatz, Sherrod Brown, Richard Blumenthal, and Tina Smith. Facebook cannot be trusted to manage a payment system or digital currency when its existing ability to manage risk and keep customers safe has proven wholly insufficient, they stated in the letter. I agree. Facebook's journey to launching a wallet and stablecoin has been fraught. A series of blistering 2019 congressional hearings all but halted the project, which was originally called the Libra. Eventually, a slew of key partners dropped out of the Libra Association. Libra changed its name to Diem, and Facebook's wallet Calibra changed its name to Novi. But Facebook made clear this morning that today's launch of Novi is a key first step on the path to Diem's rollout. We intend to migrate Novi to the Diem payment network once it receives regulatory approval. Whether 2021 will provide a more favorable climate for Facebook's crypto ambitions is another question. The 2019 Libra hearing came in the aftermath of Facebook's disastrous Cambridge Analytica scandal. Today's blistering admonition was likely informed by the bombshell testimony of Facebook's whistleblower Francis Haugen before the Senate Commerce Committee just weeks ago. The senator demanded that Facebook's both abandon Novi immediately and scrap any future plans to release Diem. Time and again, they wrote, Facebook has made conscious business decisions to continue with actions that have harmed its users and the broader society. You know, I kind of, I don't want Facebook to do this either, man. I really don't. I like decentralization. I like crypto. I'm totally for it. But Facebook just has bad luck at taking care of users' data. It is what it is, man. And
Yep.
and doing that with finance, like no. I don't know about that.
They did technically have a Facebook coin. I think they still do to some degree. You know, it's internal and it exchanges U.S. dollars or whatever the local coin is that you're using for their internal coin. So it's not really that weird. The difference here is that coin was only for playing games. This coin is supposedly for everything.
It's for real world use.
Yeah, for real world use. And so I can kind of see the rejection of it. U.S. government's going to have a problem because it's a U.S. company. I'm not so sure that all the other governments are going to be super happy about Facebook doing it because Facebook has so much, but such a high level of control over the world. And that's the reason that Europe was so upset with Google. They're like, you have too much power here, and Google's like, true, but did you ever notice the fact that we're not making anybody use this service? It's the same thing that Mark Zuckerberg is basically saying here too. It's like, look, nobody has to use Facebook. And a lot of people are like, well, the reason I have a Facebook account is because I kind of have to keep in touch with my friends and family. Yeah, that was your choice. And with that perspective, I agree. It's not something they forced you to take. It's not something you have to take. It's something, and honestly, you should probably stop taking. But it's a service, a functional thing that is not. There's no mandate. Not like if you drive a car, you have to have a driver's license in most places in the world. You don't have to use Facebook. There's no mandate for you to use it. But because so many people do, that's where the government's kind of like, So.
I don't have a Facebook. I don't have a TikTok. I don't have.
But you have a Twitter.
But the Twitter, it's not technically like for me. It's for C3 Media. So there you go. How about that? How about them apples? You know?
Okay, you're right.
Yeah. See, I
I'll
don't.
give you that.
It's not. Yeah. It's not for real. It's not for personal use. Yeah, and I don't even use Google. As you can see right here, I am using Brave, and I personally do recommend Brave. It's not been perfect. They've had their own issues in the past, but I think they've learned from that and moved forward.
I believe it was Naomi Rockwell who said, even if you don't, even if you don't use Google and Facebook, you still use Google and Facebook. That's because their hands are in everything, and there's
Yeah,
not
I
really any way
think
of
actually,
avoiding
as a
that.
matter of fact, what's that other um, Google alternative? No, not the Google alternative. Not the
DuckDuckGo,
Chromium.
Chromium. Oh yes,
Chromium.
but that's made by Google though.
Right, exactly. I was going to say that. So Brave is basically a copy of Chromium. They're using Chromium on the back end, and that's why people are able to use plugins so easily on Brave. So yeah, I understand that point. Yeah, sure.
Yeah, it's based off of the open source version of Chrome.
Yep.
So
All right, let's go ahead and wrap this up, man. We're about almost an hour and a half in.
let's let me in the tail, the plug here at the tail.
Sure, go ahead.
If you, I shouldn't actually have to say this out loud, but at this point, how many of our listeners are you guys still here? Good. Okay, cool. Well, if you are still here, can you please like and subscribe? We really appreciate that. It helps us with the YouTube algorithm, which is owned by Google. You didn't know that already. Hit the notification bell. We do post every Wednesday and Sunday. We also have our interviews every Thursdays, so there will be one tomorrow. Check us out on Discord. Hit the link. Come and join us. And if you would like to support us, please support us using Bitcoin, Ethereum, Binance, or Basic Attention Token. All links in the description below. Back to you, John.
All right, with that said, Kryptonauts, until next time, stack sats and hodl. Adios.